Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is an updated look at the dollar versus yen. I did a report early this morning after the price was testing its rising 100-hour moving average. But since then, the price has dipped below that moving average, but found support buyers near other targets and have rebounded sharply. So let's take a look at that currency pair from a technical perspective. Let's get going. Recall from my earlier video this morning, I was talking about this 100-hour moving average holding support. We held it here and here. Each of the time the price moved higher, came back down, moved higher. And in the New York session earlier this morning, the price fell below that 100-hour moving average. We did see a dip lower in yields, and that helped to push the dollar yen to the downside, breaking the 100-hour moving average. And in the process, saw increased momentum to the downside. That momentum did take the price down to and through the 200-hour moving average. That's a green line in this chart, but held support against the key 100-day moving average at 147.597, and the price has since rotated back to the upside over the last 1, 2, 3, 4, or 5 hours. So we are seeing an increased momentum, and that momentum has now taken the price back above the 100-hour moving average. Note here on this bar right here that the price low came in and tested that 100-hour moving average, similar to what it did here and here. So we had the failed break. The price held support against the 100-day moving average and then moved back above the 100-hour moving average, holding that level as support. Guess what? Going forward, that 100-hour moving average could continue to be a risk-defining level or bias-defining level, at least in the short term. If we do move below that level, we have other levels to get to and through, including the 38.2, the 200-hour moving average, the 100-day moving average. Yes, but breaking below that level would increase the tilt to the downside, especially after finding support against that level on a number of different bars in trading here today. On the top side, the next key target will look toward this level right here, which comes in at 148.32, and then we'll look toward this swing area up here, which was largely defined back through here. We did have some breaks to the upside, and then we reestablished resistance here. Got a little messy over the last few trading days above and below that area on its way to the high right here at 148.88, but getting above 148.45 to 59 would increase the bullish bias. And then we'll start to look back toward the January high at 148.80, and the high that we saw just 2 days ago that went up to the 88 level failed and rotated back to the downside, reestablishing the 80 level as resistance before moving to the downside. So sellers had their shot. They went and tested these moving averages, but could not get through all of them. And we are seeing a rebound back to the upside. Watch that 100-hour moving average is close support. My name is Greg Mikulowski for ForexLive.com. Good fortune with your trading. Bye-bye now.